Hey everyone, in this video I'm going to highlight why I think everyone is talking about Blink charging stock. And I think the reason why Blink charging has everyone talking is because of the CEO change. A leadership change could have big implications to stock market investors, and so I think that's raising a lot of curiosity. So let's get right into this brief video here. Of course, analysts, Wall Street analysts, were also curious about this change, and analysts asked the Blink Charging's new CEO, saying, "Hey, is this change in leadership, the change in CEO, potentially going to lead to a pivot or an alteration of the strategy as far as diversification, international manufacturing? Is it going to change any of that stuff significantly?" Because that's where the change comes from the top, in terms of the business model, in terms of the big picture choices. That typically comes from the CEO. The other factors, those are mostly executional, and those come from the bottom line management teams in terms of executing the strategy that the CEO lays out. So let's see what this new CEO thinks here. So Brendan Jones comes in and saying, "You know what? No, there isn't going to be any major departures. I mean, we're going to continue as we have been under Michael's leadership." So Michael was the previous CEO and the founder who's going to stay on as the board of directors. And so this continuation is going to include manufacturing of the product, new features and benefits. And the big thing with the manufacturing of the product is Blink Charging is looking to remove any kind of outsourcing. They're looking to onboard more of the manufacturing in-house. And what that's going to do is increase profit margins, because when you manufacture in-house, you're spending the capital up front. You're spending millions of dollars building out the manufacturing capacity, but then that's going to lower your costs per unit. Costs per unit are going to be lower versus what Blink Charging is doing now, where it's taking a piece, a percentage of its overall production is outsourced by third parties. And for those units, Blink Charging has to pay a higher price per unit. And so as it brings in-house more of its manufacturing, that could bring up its gross profit margin, but that's not without risk. That's not without risk, because now the company has to spend millions of dollars building out the manufacturing capacity, and this is money that's in scarce supply right now. Also, they're also going to continue looking at both the US and global. I mean, we're a global company. True, but I mean, roughly 80% of the company's business comes from the US, and around 20%, I think it was 22% in its most recent quarter, came from its European segment. I don't know. I would have preferred, especially with companies that are losing so much money on the bottom line, like Blink Charging is, especially as the cost of capital has increased so much in the last year. This would have been a good opportunity for the new CEO to come in and say, "You know what? Let's divest some of our European business, or let's divest all of our European business. Maybe we can sell it to raise some capital and focus more on our US operations and become more focused, more streamlined." I thought this would have been a good opportunity to do that. If I was a Blink Charging shareholder, I would have been a little disappointed that this didn't happen at this point. Although it's not a huge deal, it's just an opportunity I think that could have been more well suited to the changing cost of capital environment right now. It's actually the opposite. They're actually expanding more into Latin America right now, which is one of their hottest markets. Now, when they say one of their hottest markets, they mean in terms of revenue growth. Like, yes, you're going to increase sales, but as a company, you're losing a lot of money on the bottom line. I don't know if it's prudent to go after more markets. Now, that may actually coincide well with the fact that they're bringing in-house more of their manufacturing, and so now they need more markets to be able to sell more units and thereby bring down the cost per unit to increase the economies in scale. That remains to be seen. Although, again, it's risky. It's risky. And at a time when the cost of capital is so high, I'm not sure I would be wanting um, my management team to take on these new markets. So we're going to continue product and network basis based, and then we'll pivot where necessary based on customer and market demand. So overall, the CEO saying we're going to go down the same path, and we'll make minor adjustments as we get feedback from the market. As market conditions change, we'll change. We'll make it. We'll adapt if we need to. But overall, the sense that Wall Street got, and the sense that I'm getting from the new CEO, is we're going to pretty much go down the same path. We're not making any big changes. I'm not coming in here with a bunch of new ideas. I'm not going to take the company in an entirely new direction. And not even an analysis, a big picture overview, a big picture um, research being done saying, you know what, let's take a look at what we're doing and let's evaluate and let's see if we need to make any changes. Not even that from the new CEO, just saying, no, you know what, we're just going down the path we've gone on. So that's the choice, that's the strategy, and it remains to be seen how effective it will be. But it certainly has a lot of people talking about Blink charging stock. But that's all I've got for this video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.